Hello, ladies and gentlemen, and welcome back to the Pipe GDAO podcast. I'm your host, Noodle, and today we're going to be talking about tokenization of real-world assets and a bunch of other stuff, also talking about the PEX. But right now, I want to sort of talk about global trends right now, which is tokenization that's happening right now. So it refers to tokenization of RWAs, is referring to converting ownership rights to tangible or intangible off-chain assets. So kind of like real estate, equity, debt, or IP into blockchain-based tokens. Um, this is kind of like by 2030, analysts from the Boston Consulting Group, SITE, KPMG estimate 10 to 16 trillion of tokenized assets will exist on chain. So key benefits of that would be obviously liquidity, which is previously illiquid assets like private equity or early stage R&D become tradable. Access would mean, which is because of fractional ownership, which would open the door to retail investors globally. Transparency, which is obviously on-chain data, which gives a verifiable audit trail. And programmability, which is smart contractors automate compliance, payouts, and governance. So driving factors like TradFi adoption, major institutions now validate RWA tokenization as part of the future, regulatory clarification jurisdictions like the EU, Singapore, and the UAE are establishing clear paths for tokenized finance. DeFi stagnation as pure crypto speculation wanes, demand shift to real world utility and yield bearing products. This is not a theoretical trend, it's unfolding right now, and the retail investors getting locked out again unless truly open platforms are built. So this kind of stuff is all happening because there was a massive power move by a man called Franklin Templeton. So in early of this year, 2025, Franklin Templeton, he issued a tokenized private equity vehicle with exposure to SpaceX, which was hosted on public or permission blockchains like Avalanche or Stellar. These tokens represent economic exposure, not voting rights, to SpaceX's shares held by Franklin. So this is a real institutional validation of tokenized private markets. It also shows that tokenization is not inherently decentralized. So Franklin's SpaceX token is permissioned, so it's only qualified institutional investors or high net worth individuals can access it. And it's custodial, so you'd be buying exposure to an asset they custody and control and illiquid outside of their network. So tokenization does not necessarily equal democratization. So Franklin's version replicates the same old power structure, but it's just on chain. Whereas, in comes Robinhood with tokenized stocks. So in mid 2025, Robinhood launched tokenized stocks and ETFs, which is including synthetic exposure to public equities like Tesla and Apple, private companies like SpaceX and OpenAI, and it's only available in Europe due to US regulatory restrictions. So these tokens track real-time market prices, are not backed by actual shares, are synthetic derivatives, not equity. So why that matters is Robinhood moves signals that retail appetite for RWA tokens is enormous. They're experimenting with fractionalized 24/7 markets for assets that usually trade in walled gardens, but again, you don't own the underlying. You are trading a contract that tracks the price. But of course, that comes with limitations. So Robinhood still owns the rails, but it's still a Web2 company offering a Web3 wrapper with no governance, no equity rights, and limited global access. But again, why does this matter for global finance? Well, the current financial system is kind of shifting because right now it's exclusive, only accrediting investors that get early access to high growth companies. It's opaque, so private deals would be happening behind closed doors and siloed. So innovation in universities and R&D institutions get stuck in tech transfer limbo. So RWA tokenization could globalize private equity or private capital markets, sorry, giving developing nations and average citizens access to previously off limit investment opportunities, break down institutional monopolies on access to yield, and bridge DeFi and TradFi, which is pulling in real utility capital and growth, but only if it's done right.
So here's the hard truth. If you missed early Bitcoin, if you missed early DeFi, and if you missed SpaceX on chain, it might feel like the alpha train already left the station. But guess what? A new wave is forming. And it's not just bigger, it's smarter, more intentional, and laser focused on real world impact. That wave is the Pipe Exchange, aka PEX. And if you've ever dreamed of being a seed stage investor in world changing science, this is your portal. So, PEX is the final component of the Pipe ecosystem, a decentralized exchange purpose built to turn lab bench ideas into liquid markets, to let the public trade in real research from day one, and to enable a fully decentralized version of what NASDAQ should have become. And today we're going to be breaking it all down. So, first things first, what is PEX, the Pipe Exchange 101? Again, you can see this all on our white paper, which is linked on our website. So, PEX, it's just, it's not just another DEX, it's a decentralized, community governed trading platform where early stage university innovations, we're talking deep tech, biotech, green tech, and many, many, many more, are tokenized into financial assets and traded on chain. But of course, unlike the meme coins that we see so regularly nowadays, all synthetic stocks, again, something that is very regular, these tokens are tied to real, legally structured investment claims in real world ventures. So, at its core, the PEX performs two key functions. It's a decentralized marketplace for claim NFTs, which are ERC-1155 tokens that represent fractionalized economic rights in pipe funded ventures. And it's a compliant security token offering, or an STO launchpad for projects that hit key funding and development milestones. Typically, once 2 million euros in capital is deployed through the PGF DAO. 2 million euros, 2 million USD, 2 million pounds, or whatever currency you use. That's just the general rule. So think of it like, I guess, an innovation funnel. So pre STO is highly liquid, milestone based, KPI gated trading of claim NFTs, whereas post STO is regulated, it's on chain equity accessible to anyone who got in early. So, this will go on to obviously break the entire legacy model where capital is gated and the exits are slow and retail is always late to the party. With PEX, you don't have to be a VC insider or sit on a university tech transfer board to get early exposure to world class science. So, again, this is how PEX will go on to complete the pipe ecosystem, or not even go on, how it does complete the pipe ecosystem. So, to really appreciate PEX, you need to zoom out and see the full picture. Pipe isn't just a launch pad, it's a full stack capital formation system engineered for research and innovation. Each layer is built to solve a systematic failure in how science gets funded, commercialized, and scaled. So, the PIPE platform is where university researchers submit proposals, validate IP, and prepare for tokenized funding. Whereas the PGF DAO, or the Public Goods Funding DAO, is a milestone based funding protocol that deploys capital through governance approved trade tranches, right? So, transparent, accountable, and fast. PEX, the liquidity layer, this is where projects get a real market price, so investors gain optionality, and early believers can exit or double down or trade into new ventures. So here's how it flows. One, a university based startup would go on to submit a proposal on Pipe. Two, it will then be vetted by community experts, peer reviewed, and if approved, receives initial capital via the PGF DAO. Three, early supporters receive claim NFTs that represent investment exposure. Four, as the project hits KPIs like prototype certifications or clinical milestones, those NFTs become tradable on PEX. Five, once 2 million in funding is secured, the project initiates an STO, issuing tokenized equity that complies with EU and Swiss regulations. Six, future revenue is channeled back to the DAO and distributed to claim NFT holders. So, again, this isn't a launch pad with exit scams and pump and dumps. This is a closed loop, anti fragile, tokenized research economy. So now we're going to be talking about obviously the token mechanics, so claim NFTs and soulbound DAO identity. PEX is built on a dual token architecture that separates speculative liquidity from long term accountability. So ERC 1155 claim NFTs. So each NFT represents a financial claim on a pipe funded venture. These are modular, upgradable, and KPI gated. The better a project performs, the more valuable the NFT becomes. And these NFTs are tradable on PEX with full provenance and auditability. The ERC 6551 soulbound tokens, or SBTs, these are non transferable tokens that anchor your identity to the PGF DAO. They track your governance participation, voting power, and eligibility for revenue sharing and airdrops. You can't flip your way into power. Here, you have to earn it through engagement. This creates a layered economy where short-term liquidity and long-term governance are decoupled, allowing for fast markets and slow power. But again, let's get serious for a sec, because none of this matters if compliance isn't rock solid. PEX operates under Swiss jurisdiction with full alignment to MiFID II and MiCA, which are Europe's most robust digital asset frameworks. All investment activity, from staking to NFT trading to equity issuance, is structured to pass legal scrutiny today. So it's not in some hypothetical future. Key security layers obviously include multi-sig wallets modeled after Notice Safe for DAO treasury management, programmable smart contracts that embedded milestones, gating, claim, distribution, and liquidity rules. And then it also will go on to, sorry, seem to have lost myself there. The hybrid governance, so it's on-chain voting, off-chain legal enforcement via a DAO elected fund master with emergency veto powers. Oh, and actually, whilst I get into this, so it's KYC/AML, so it's mandatory for all participants participating in PEX. So whether you're a researcher raising funds or a degen looking to mint, this isn't DeFi chaos. It's actually completely regulated. Sorry, stuttering. Regulatory grade decentralized capital. So think of it as the Switzerland of science backed crypto. Now we're going to be looking at what PEX is like versus, I guess, more traditional avenues like Robinhood. So we're going to be doing a gut check on how does the Pipe Exchange actually stack up against obviously legacy fintech like Robinhood. So market access, Robinhood is post IPO only, whereas the Pipe Exchange is pre-seed and milestone gated. So asset types with Robinhood are derivatives and synthetics, whereas obviously with PEX, the real world tokenized claims plus STOs, as I've just covered. Governance with Robinhood is centralized and it's opaque, whereas with PEX, it's DAO led with formal oversight. Value model, is with Robinhood is trade only profits. And then with PEX, it's trade plus equity plus dividends. And the user role with Robinhood is kind of as a passive spectator. Whereas if you're a user with PEX, you then become or take the role as an active stakeholder. So Robinhood lets you buy Tesla after the factory's built. PEX lets you fund the inventors still in the lab, then ride the upside all the way to revenue. So one is rent seeking, the other is borderline co creation at that point. So we're going to be doing a case study again from lab to liquidity. So we're going to be painting a picture here. I guess, biomedical researcher in Germany, Munich, has developed a bioabsorbable sensor for post-surgical monitoring. No removal surgery, real-time data, and zero long-time side effects or long-term side effects. Sorry. She then will go on to apply to Pipe. Her tech is vetted, the IP then secured for her, and she receives her initial DAO funding. So milestone one would look like preclinical trials passed, and claim NFTs would then go on to get their first bump. Milestone two is the CE certification will be earned, so the NFTs unlock full tradability on the PEX. And milestone three, 2 million raised, so the project launches a compliant STO or soulbound token. Now, her research is backed by thousands of stakeholders across Europe. Claim NFT holders receive revenue dividends from product sales. The DAO earns yield. The scientist retains control. The lab becomes a liquid market, all without selling out to VC vultures or drowning in bureaucracy. But obviously, this is all well and good. But what's next for the PEX? You know, the strategic vision. So PEX is just the launch pad. What's coming next is fully decentralized capital market built for impact. So the Pipe Index is a real-time tokenized performance benchmark tracking ROI across all DAO-funded ventures like the S&P 500 for scientific innovation. Sector guilds or XXDAOs, focus groups like BioDAO, GreenDAO, AgriDAO, each with independent treasuries and governance sourcing sector specific innovation. Actually, just to link back to XXDAOs, back in the early days of me working for this company, I wrote a blog which was all about how DAOs can be used to clean up the oceans and stuff like that. And it's still available on our site if you want to go to the blog section. And it kind of paints the image of what an XXDAO would work like, and you know how that pot of money could be used, what the system would look like, I guess. So if you want to have an image of the sector guilds or the XXDAOs, please go and check out that blog because I worked really hard on it, and I reference it all the time because it is just that good. And I'm not blowing my own trumpet there. It is class. But again, sorry, what is next for the strategic vision of PEX is the royalty streams and bonds, of course, tokenized yield bearing assets from late stage ventures, allowing for fixed income DeFi instruments with real world cash flow. This is the future of capital formation, decentralized, sector specific, and deeply aligned with measurable outcomes. But of course, everything we do comes with risks. So the road isn't smooth, of course, but in this case, it has been paved. So Pipe doesn't pretend to be risk free. And here's kind of like what we're going to be looking at, what we're watching. So regulatory overreach, new laws could potentially restrict tokenized securities. Pipe has backup LP structures and dynamic legal tooling, which is ready to pivot for that. Speculation risk. So claims NFTs could pump beyond fundamentals. That's why KPIs and milestones gating are non-negotiable. And academic supply chain. Innovation must flow continuously. Pipe already has MOUs with over 20 European universities and is onboarding new IP weekly. So the system is modular, the governance is agile, and the infrastructure is ready. So, how to join the pipe movement? So, I guess, are you ready to level up? You're going to want to stake USDC into the PGF DAO to back new research. You must mint your first claim NFT and monitor KPIs. I guess pick your guild, so medtech, climate tech, agrotech, DeSci tech, each with its own investment thesis. Vote, propose, and guide milestone based funding allocations. Trade, hold, or convert into STO equity when projects hit success. This isn't just investing, it's architecting the future of science. So I guess, obviously, if after we've covered all that, my closing thoughts would be that I guess the pipe exchange, we're kind of in the final gear in the innovation machine. So we're transforming ideas into assets, research into revenue, and participation from you into profit. And this is taking place obviously in a world where capital markets feel, I guess, kind of rigged and science gets stifled. Pipe offers an alternative, decentralized, transparent, and aligned with real world impact. So you didn't miss Bitcoin, you didn't miss DeFi, and if you're listening now, you're early to the capital market of the future. But I guess that's a wrap for me with this deep dive into the Pipe Exchange. So if your mind's still spinning with the possibility, head to our Telegram or jump into the Discord, follow us on X or Farcaster, and even go and claim your role in the future of finance. And with the next episode, well, I guess we'll just have to wait and see. But just a little hint, we might be decoding the pipe index and how it could be one of the most important benchmarks in decentralized ventures. But until then, please stay curious, stay compliant, and always stay decentralized. I've been your host, Noodle, and again, sorry, just to reiterate, please do follow us on X, the Pipe GDAO, all of that. Please follow us. We have a lot of fun. We do daily AMAs over there, 7 p.m., 6 p.m. on Fridays. Don't do weekends, though. And yeah, please do follow us on TikTok as well. The Pipe GDAO, I post on there. Would be nice to get some more followers. Thank you very much.